Welcome back. You're watching Newscentre. India's central bank digital currency has arrived. It's a pilot. It's confined to a closed user group of 9 banks. Even these banks could only trade government bonds. But important that the pilot has taken off. Latha Venkatesh gets us more.
Yes, that's right. India's CBDC, central bank digital currency, has arrived. Today, 9 banks did 48 trades via CBDC, only for buying and selling government bonds, for a total value of 275 crores. That's the first Indian CBDC. This is a pilot, of course. The Reserve Bank has chosen 9 banks which form a closed user group and had to transact between themselves. These 9 banks were 3 PSU banks, that is SBI, BOB, Union. Private sector banks, large ones were HDFC Bank, ICICI Bank and Kotak, and the smaller ones were mid-cap banks were IDFC and Yes Bank, and there was one foreign bank, HSBC. Now, this is how the process unfolded. First, these 9 banks had to open a CBDC account in RBI. You know, RBI already has a Rupee account of every bank and a GSEC account. Now they had to open a CBDC account. Then they had to send a request to RBI to transfer part of their rupees in the Rupee account to the CBDC account. This was done actually with the help of NPCI, which has more experience in e-Rupee. So RBI transfers that money. And then the banks have to send their orders to CCIL. At the moment, CCIL is the exchange, you know, in the non-CBDC, that is the exchange through which bond trades are done. So in the CBDC's screen, your RFQ, your request for a purchase or sale of a certain bond would appear. All the 9 banks could watch that screen and they could click on whatever they wanted to buy or sell. That's how the trade got done. And then you don't need a CCIL to transfer your money because both the buyer and the seller have a CBDC account. The monies get debited and credited to the buyer bilaterally. You don't have to go through an intermediary. Now, just to explain, this means the settlement is immediate. It is not T+1 as it is in the current legacy system. Currently, all banks trade with the CCIL like you do in a stock exchange. Everyone buys and sells to the CCIL. At the end of the day, you get a number as to what is your net position, whether you have to pay in or pay out after all your buys and sells are adjusted. In the CBDC system that is piloted today, it is a bilateral gross settlement. You know, say ICICI trade with SBI, SBI's trade with HDFC Bank, all of them are bilaterally settled immediately through the CBDC system. That is how this is going to work. The settlement uses the distributed ledger technology. So technically, if all trades were done like that, you will not need a CCIL, but that will be a long time coming. For the moment, it's only a pilot and it was an experiment. Settlement is not T+1, it is immediate, it is T+0. There were, of course, some glitches in terms of login and slowness of trades as people were learning things like, you know, money is inadequate in my CBDC. I send a second indent to RBI to transfer a little more money. All these things were what banks learned today. But in the days to come, it will be scaled up.